All right, what's going on, team? I'm having a head start on next week as I'm really looking to gain momentum um back into the weeks of trading after I open up the shop and whatnot, and yeah, it took about 2 weeks now that I've been getting that thing straightened out. So before I really jump back into the markets, I need to have a refresh of what's been going on as well. I've been paying attention, of course, but I need to see what fundamentals propelled some of the movements in the market, especially on this last Friday. We had non-farm payrolls. The batteries up. We had non-farm payrolls. We had unemployment come out. So there's some information. There's some information that was delivered fundamentally that influenced some movement in the market. So we're gonna go ahead and go over that information. All right. So first, more importantly, we're going to have a look at the U.S. dollar. It looks like we had non-farm payrolls. We had possible interest rate hike discussion. That was a meeting in the monetary policy, and we had unemployment. First, kicking off, we had 200,000 new jobs added to the economy for the first quarter. So that is bullish for the dollar. Let's see, 200K, which that's good. And then we had possible interest rate hike discussion that led to a reasonably higher than normal that we would be getting 4 interest rate hikes throughout the course of the year. They're pretty much talking about the chances of them happening per se. Not exactly totally sure, but it did not turn out to be that. They're going to have 4 interest rate hikes this year. They talk about possibilities of them occurring and when they're going to be occurring, things of that nature. And non-farm payrolls did that, and then unemployment stayed the same. So that was pretty neutral for the dollar. Probably caused some whiplash in the market, I'm sure. Okay, so note that. Okay, that's done. So we probably had some whiplash movements at that time. Doesn't really look. Oh, this is a big movement candle here. A lot of whip going on in here. So and it still resulted as a way down lower. We know that the support for the DXY, the really strong support down here at 85, 84 cents, and then a reasonably strong support here at 87.90. So it looks like we're running out of steam down in this 88, 89 cent range. We're running out of steam, at least for the downward trend. So I believe that we're going to see some changes here coming up here soon. Probably a reversal or to net bottom and dangle here, right here at 88 cents for a little while before we start to reverse. But what I noticed is that the dollar did continue to slide, but some advertent pairs against it decided not to. And the first pair that I noticed that did not continue to grow was gold. Gold reached that peak of 1350, 1360, and it pretty much halted right there. It had no interest in breaking these highs up here, gold. So 1367 was the high for gold, which was the ultimate short. It looked really, really good. The anomaly zone played really tight still. There were some great shorting opportunities for gold. And that one daily candle was an impressive move here. $17 in one day, which was on Friday. It looks like that's the bullish candle. The bearish candle that closed out Friday. So really interesting. to see no higher progression, no break of the yearly highs of what past 2016 and 2000. Let's see, 2015 highs, 2016. So we didn't have a technical break of those, but this anomaly zone here is playing really tight. So, but as far as predicting gold's next move, I'm not really too interested in seeing what's going on with gold from here as of right now. I see a lot more opportunities in places like the S&P 500's coming up. This thing did a little hurt on me this week, and there's some good reasons why. The S&P 500 shows some of the most consistent gains in any asset class in the financial markets. So I was rather consistently buying the dips, and it worked out quite well for quite some time now. I had some issues with understanding, with at least placing in my mind the downside potential that the S&P 500 could possibly have, even after going, I had to recontinue. Even after going overbought on the oversold on the RSI, it's definitely has some really strong selling momentum. I mean, some of the things that you have to be wary of that, as an investor myself, sometimes I don't always calculate into my judgment, is that every asset class does have a downside, and you always have to risk in the downside. And when something provides some kind of the kind of consistency that this asset class has had, sometimes it just goes over thought. I mean, it just goes under thought. Sometimes you just like, it's just going to go up forever, and that's usually not the case for anything. And I knew it had downside to it, but when was the question, and it just so happened to be this week. And there was a few things that happened this week that supported this correction, and it looks like the next support might just be down here at the 2690 level if we don't find support in the 2750s. So it's already oversold on the daily, probably isn't on the weekly, but nope, we're just pulling out of the range just barely on the weekly. So there is still more correction available for the S&P, and I believe buyers will eventually start to step back into the market again, and it's just really interesting to see. And there's many other markets that are under pressure this week. You got Bitcoin is under pressure again this week. We have the Dow Jones is also under pressure this week. If I could find this chart here, Dow Jones almost 1,000 points in the industrial average. So for the U.S. major equities, it's really interesting. You got the DXY is also down. So so there's a little something going on in the markets over the last couple weeks. But hey, they have been having a stellar performance over the last 60 or 90 days. I mean, it's only expected that a correction were to happen. It's just way overdone, especially the major equity. It is way overdone. It's just way overdone. Look at this. So just like a correction that would happen in cryptocurrency, a correction happened in this market as well. And it's definitely important to gauge all these things into your analysis when you're placing trades, or just understanding the risk of any given trade is just as important as putting the trade on. So that's a brief rundown of what happened with some of the dollar assets. So pretty much, and then some fundamentals that we also have to think about that we got to consider for the week ahead is Janet Yellen stepped down. Her last day was on Friday. For the people that don't know, Janet Yellen is the Federal Reserve Monetary Policy Chairman. She has been in control of pretty much the economic growth and the economic or the monetary policy over the last like 8 years for the United States, and she's pretty much finished. Nah, she's pretty much finished. She's done. She had a nice exit speech. Hey, despite the bad day of the Dow Jones and the S&P 500, in her exit speech, she pretty much explained the growth that happened over the last year for the United States and the potential growth that there is foreseen in the days ahead. You know, just by the tone of her voice, you can tell that she's not worried at anything about of anything about the correction that occurred on Friday. You know, and she knows that this is normal market movement, and but on her way out, she overseen some information with Wells Fargo. So allow me to briefly describe this paragraph to you. And with that disciplinary action, now former Federal Chairman Janet Yellen went out in style on her last day of work. Yellen overseeing the decision to announce a serious smackdown on Wells Fargo. This reminder of the Fed's seriousness was quite inappropriate for the day on which the market sold off an admin long-term spike of interest rate hikes. The U.S. jobs report for January was strong. That's 200,000 jobs added to the economy, notably year-by-year wage growth of 2.9%. The prospect of the Fed that no longer supports market liquidity looms even larger, making Yellen's exit almost metaphorical. So, in her speech, she describes, maybe I can give you guys a few minutes to hear her exit speech right here on our chart. We'll go ahead and let's see if we drop the dollar chart, I guess. Let's see here. Let's get a play.
That have created over time problems for groups, but I think all groups in the American strong at this point. We had a report this morning, 200,000 jobs in January, average of 175,000 jobs a month over the last year. We're seeing the benefits of that, I think, for almost all groups in the American economy. And, being able to find a job, seeing plentiful job openings, and wages beginning to rise at a slightly faster pace. Of course, there are still problems in the labor market, structural shifts that have created over time problems for groups, but I think generally the job market is strong and inflation is low.
And I want to ask you about many of those things, but in terms of growth, how long do you think this kind of growth can continue? Another 2, 3, 4 years?
Well, the economy has been growing at 2% or a little bit over 2% for a number of years now. And one of the problems we face is 2% is not a very high number. And yet it has been sufficient pace of growth to see a lot of jobs created, a lot of tightening in the labor market, which is good because we had so many people who were out of work after the financial crisis. It's put them back to work. It's helped heal the labor market, and that's great. But the pace isn't what we would ideally like to see.
You mentioned wages and the jobs report today.
It
did show.
So that was a brief, minute or 2 minutes, the last of her time spent with us here in the United States. So that's Janet Yellen. She's closing out her time as a monetary policy chairman or Federal Reserve chairman. So really interesting times for us as she has held this position, I think, for 8 or 10 years. So we got a new guy coming into play, something Dudley. We don't really know too much about the guy. But, this is my Saturday quick pick or quick rundown. I'm going to start doing these videos more often. I really like them because I like to talk. So when I get to voice my ideas or what I'm thinking, I think it's healthy for me. So I'm going to do another one as I'm going to get into more of the cross pairs for the dollar. And look to see you guys on Sunday. I'll be back on Sunday.